Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi, along with my co-host, the TIE Director of Content, Lawrence Lewitton. Let's take a look at what's going on in the markets. Let's start off with Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 26,678, remaining steady despite all of this regulatory news we've been getting this week. Let's see what's going on with Ether. The CoinDesk Ether price ETX index is at 1,851, up about 0.26%, the same thing as Bitcoin, just weathering out the storm there. And let's take a look at what's going on in DeFi. The DFX, CoinDesk's DeFi index, 99.34.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, so we just took a look at the markets. Markets remain steady despite the regulatory news, like I just said. More news this morning. Binance US says users should withdraw US dollars as soon as possible as the SEC engages in, quote, extremely aggressive and intimidating tactics against the company. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
All right. So Binance US is saying that it's transitioning to an all crypto exchange. Tell us about this latest move and what it means.
Yeah. So obviously last night / this morning, Binance US announced that it was suspending USD deposits and would soon be suspending USD withdrawals, recommending all customers withdraw USD as soon as possible. This is set to take effect on June 13th, which, again, recall that's the same day as a hearing against the SEC, in which the SEC has asked for a temporary restraining order to freeze Binance's management from being able to access Binance US customer funds. Obviously, this is an escalation, right? We saw earlier this week Binance US delisted or announced it would end trading with a number of token pairs against the USDT stable. And stopping USD transactions entirely on their platform. So kind of suggests they're a little spooked.
It suggests more than that. I mean, from what I gather from that announcement, it's their banking relationships are spooked. Basically, it reads as if their banks are saying, "Look, we're going to give you a week. I mean, like we don't want to cause problems here, but you got to close down." I mean, this is basically it's like honestly, like, what are you going to do? You're going to trade crypto for other crypto on Binance US. Why are you going to even bother if you can't get the money out? You still have to transfer it out somewhere else. Binance US wasn't really that big of a player in the US to begin with. It's not like it's not like they were Coinbase was shaking in its boots. But this sounds like the banks are the ones that are pushing this.
Yeah, that's definitely, I think, a solid interpretation of what they said. What did they say? Our banking partners are preparing to pause fiat withdrawal channels as soon as June 13th, is the phrasing from the tweet itself. So yeah, you're absolutely right that this could be a move driven by Binance US's banks, which again, some of the allegations we've heard coming out about the banks, specifically the fact that Binance's management, which is Binance, CZ, that they have access to these funds might be something regulators are really concerned about. It's certainly the cause of the cause of action for the temporary restraining order application. It's also fascinating to kind of see the contrast between Binance US here and Coinbase, which is so far, they do not have any of the same issues right now. They're outright refusing to do things like shutter staking program. So two very different responses so far.
Except I would say that it sounds, I mean, like when we look at it, the two cases are vastly different, and well, I don't know, maybe not vastly, but good, because in both cases they're talking, they're talking about the similarities are trading securities. But the thing with Binance is far more egregious in terms of what they're saying that are alleging Binance did is that, the commingling of funds. And then again, we always say, yachts are involved. I mean, like,
there's that one mention of yacht. I mean, just to straight up the fact that, obviously the SEC has, made allegations in a court of law. Binance is, we're waiting on that response. But, one of the details that came out over the court documents, allegations that millions of dollars, hundreds of $1 million, up to $12 billion in Binance customer funds might have been sent to market makers and other entities that are owned by, CZ. Clearly these allegations of, financial mismanagement are really serious.
FTX in magnitude. That's what it sounds like.
Yeah, right. Yeah. And a lot of those are tied to the, allegations that CZ and Binance management had access to Binance US's bank accounts. So, to your earlier point about the banking partners being nervous, it could be that these allegations have, really struck a chord, because if the banks themselves have allowed, someone other than who they KYC'd and who they onboarded access to those funds, that's probably not great for them either. That's the kind of thing that might trigger closer scrutiny from their own regulators.
I think KYC isn't even on the top 3 problems with this. I mean, this is like, oh yeah, we're giving the money to the CEO to do stuff. Okay. That's basically
to a market maker to, bolster liquidity on the exchange that he owns.
Maybe some of that money went to go to paying for lunch with Gary Gensler back in 2019. That would be funny.
Yeah. That's definitely happening.
That would be a riot. Someone look into that. Ian Allison, where are you?
Nick, we've talked about these 2 cases all week. They're obviously very different. We've just unpacked the differences. Any indication that Coinbase might take drastic measures like this in the near future?
Not yet. I think the biggest difference here, beyond the allegations themselves, if we look at the SEC's conduct, the SEC applied for that temporary restraining order against Binance, Binance US, and CZ. It has done no such thing in the Coinbase case. It also, it's worth noting that the 2 cases are filed in different jurisdictions. The Binance case was filed in the DC District Court. The Coinbase case was filed in the Southern District of New York. So, clearly they're also kind of approaching the cases themselves a little bit differently. If you're in New York, that's where we've seen most of the cases. Those are kind of more the financial stuff. So the case itself being relatively mild in, terms of the allegations and the details spread out within the pages of the complaint. Clearly, the SEC is just looking at this as okay, well, Coinbase is doing crypto exchange stuff, and we don't like that. The Binance, accusations are, as we've said, much more serious. Straight up, I don't want to say that they are, potentially criminal in nature, but they're the kind of things where
is not. I don't think that's a misdemeanor.
Right. Yeah. Like we've seen. I don't know if we've seen this specifically before, but the fact that they filed it in DC kind of suggests that they're treating this as a. I don't want to say more serious either, because it implies the other one's not serious, but like kind of more serious from like a very specific, kind of, criminal national security perspective type thing. So, the big question is, will there be more to come on that front? And we're still trying to figure that out. But clearly the SEC is approaching these 2 cases slightly differently. So Coinbase, I think right now, there isn't quite the same need for it to do any kind of, drastic measures. It's not delisting any trading pairs. It's not, it's not even stopping a staking program, which, 10 different states have so far come out, and, we've got multiple orders and cease and desist and stuff. So Coinbase clearly right now is in not as severe a hole to, deal with this right now.
Nick, what's the buzz you're getting? I mean, like you talk to like very powerful people. I don't want to say who you talk to, but I think let's just say they're pretty very important. What's the buzz?
I mean, it's complicated, right? On the one hand, The SEC has telegraphed this for quite a while, going back all the way to, the Biaxi case from last year, for example, or the, Ishan Wahi case, the former Coinbase project manager who was accused of insider trading. The SEC has clearly telegraphed what it's doing for quite a while. The Coinbase case lines up perfectly with that telegraphing, right? With the Biaxi case, with the product manager guy, with the Bittrex case from earlier this year. So, on the one hand, the SEC has for a while now said that it believes crypto exchanges should be split up into the three different kind of components of a securities trading entity. So the clearinghouse, the broker, and the exchange itself. And now crypto is going to discover what that looks like, what that effort is going to look like. The Binance thing, on the other hand, clearly much more serious. And that's the one I think has a lot of people. I don't want to say concerned. I keep saying I don't want to say, and I say it anyway.
Say it. You want to say it.
Yeah,
Just say it.
Don't say it anyway.
Just say it.
I mean, very self-reflective thing. The Binance case is clearly a lot more serious, and it's clearly catching a lot more people's attention just because of the allegations. I mean, this is the world's biggest crypto exchange, and right now a pretty powerful federal regulator has accused it of doing playing all sorts of games with people's money. That's a pretty serious allegation. And Binance's response so far has been, okay, well, this is regulation by enforcement. We disagree with some of these charges. We're going to vigorously defend ourselves. Oh, and by the way, we're also shutting down the USD access on one of our affiliates. It's not a great response right now. It's kind of they're taking this seriously.
Nick, thank you very much for joining us this morning. You'll be back on Monday, I'm sure, to unpack all things regulation. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, our next guest is ready to go, and we're talking about Bitcoin life insurance. A startup called Meanwhile has raised $19 million in funding. Our first guest is Meanwhile co-founder and CEO Zachary Townsend. Welcome, Zach.
Thanks for having me.
Thanks for being here. All right, why don't you start off by telling us about the vision behind Meanwhile? What's the vision that you raised this $19 million on?
Well, look, the long-term vision is to build the world's largest life insurance company. How we're doing that is we are combining first, building a Bitcoin-denominated company. So when we look out 10, 20, 30 years, what we see is that there is going to be a huge global economy built on Bitcoin. And we are building the life insurance company for that economy. At the same time, we are riding the wave of artificial intelligence, which allows us to build all of our operations from scratch, our own policy admin system, our own claim system, our own underwriting system, which allows us to be a lot more operationally effective, a lot faster at giving decisions to our users, have a lot fewer people. And it's those combinations, that combination of building for an entire new economic system and using AI that allows us to, again, we hope build the world's largest life insurance company. So,
okay, when I think about life insurance, I usually think that they put the money in something pretty not volatile, and that they pay out in dollars, and that's so that my kids or whoever I decide to give the money to, that they have something set amount. How is this working? Is it like you go, okay, we're going to pay you out in Bitcoin? I mean, I don't know. I think I need life insurance whenever I trade crypto. So I sort of like trying to figure out here, how does it work?
So let me start by describing how our Yes, exactly. So our entire company is denominated in Bitcoin. We take all our premiums in Bitcoin. We pay out all our claims in Bitcoin. We do all our reserving calculations, all our regulatory math, all our finances in Bitcoin. We state our financials in Bitcoin. And what that allows us to do is not worry about day-to-day volatility. Because you give us Bitcoin, we promise you Bitcoin back. If the price of Bitcoin's 28,000, as you said earlier, or it's 35,000, or it's 15,000. It doesn't matter to us. We're looking out 10, 20, 30, 40 years, and our belief is that Bitcoin is going to be worth a lot more than it is worth today, and we think a lot of our users agree with that.
So, how are you doing the actuarial stuff here? Because it kind of gets funky. Because of course, trying to put a lifetime value on an individual based on age. I mean, I assume whoever is going to do this, they're pretty young, and the probabilities of them biting the bullet or eating dust or whatever you want to say is pretty low.
Yes. Well, let me start by saying, yes, we have actuaries on our team. We have consulting actuaries. Like, we do exactly what you're saying. When someone applies, we underwrite them. We look at how healthy they are. We make a projection about how long they're going to live, and then we make a promise to them about what their payout could be. So how the policy works is it's called a whole life policy. It lasts your whole life. So you might pay in 1 Bitcoin a year for 10 years. So it's what's called limited pay. So or you can pay up front. So you can pay 10 Bitcoin today. And then we promise you 25 whenever you die. And that ratio, that promise we're making you, is definitely based on your age. It's definitely based on how healthy you are. And we do standard actuarial work.
So wait. So you pay in up to 10, you guarantee 25 out.
Well, earn's an interesting word, but yes, whenever you die, you get whatever we promise you.
Right, but
10
I'm saying
to 25 would be a pretty normal ratio for someone who's healthy in their mid-30s, as you mentioned.
But then how do you get that extra Bitcoin in return? Because of course, it's like you haven't. It's not like they're printing Bitcoin beyond what they're mining. No. So I mean, that's the whole point. So I mean, when I'm just trying to figure out how you're paying 2.5 to 1 on something that's like you pay in. In other words, you have to earn Bitcoin to pay it back.
So we make Bitcoin-denominated investments, and we make a promise to look. Let me just take a step back and say our ultimate goal is we believe that Bitcoin is going to transform from being digital gold into being digital money, and money is active. We believe there's going to be active capital markets, that there's going to be an entire economy built on Bitcoin, and what that means is that there's going to be yield in Bitcoin that's accessible. What we do right now is we make loans to creditworthy institutional counterparties to get yield on our Bitcoin. The difference between us and many of the people who do lending in the past is, we're not making promises to people that they'll get their money back today. We don't have liquidity issues. We're very conservative. We're very well regulated. We have an investment policy. We have an independent board. We have an investment committee. And all of that is set up to make very conservative investments, and we do term loans. And the advantage we have against anyone else in the market, and something that we are helping to create in Bitcoin, is longer term lending. So we're looking to lend to people at conservative rates at 3, 4, 5 year durations, and that's how we get yield.
You mentioned that your customer is a Bitcoin whale. That's who you're looking at right now as people who are going to buy into these plans. How many people do you have committed to using this product? It doesn't feel like there are that many Bitcoin whales out there who are looking for a life insurance policy to participate in.
Yeah. So we've sold, first off, let me just say the ultimate vision of the company is that we believe that many millions, hundreds of millions, billions of people are going to be part of the Bitcoin economy. And if you're in a country that has inflation risk or currency risk or regime risk, we think it makes a lot of sense for those people to buy a life insurance policy in a digital global currency that has nothing to do with their local economy. Right now, so we have started, and just the numbers I threw out, are pretty big, in designing a product that's optimized for crypto whales. And one of the reasons that is life insurance it's both a way to protect your family, and it's a way to do financial planning. It's a way to do estate planning. It's a way to do some tax optimization. There are real tax privileges and tax advantages to life insurance in the U.S. tax code and the tax code of almost every developed economy in the world. So if you're a crypto whale, you're planning to hold for HODL for a long time anyway, doing that inside a life insurance policy can be very smart, very tax advantaged.
What are the it's too I'm sorry, what's the minimum that someone pays in per year?
Right now, our minimum is total premiums of 5 paid over 10 years. So that'd be half a Bitcoin. So you have to be pretty substantial. You don't have to have a stack of 2,000, but you don't have to. You don't have to be. You also can't be a person with a tenth of a Bitcoin.
It's like $1,200 a month. Yeah.
And how many people do you have committed to using the product?
Sorry, my apologies. We got licensed the end of last year. We bound our first policy actually just a couple of weeks ago. That's part of this announcement. Is we both raised $19 million and we, have launched. We have. Well, this week it's changed, right? Because we launched and we had a lot of people sign up to the wait list. So it sort of depends what you mean by committed. I'd say there's dozens of people committed, and there's a longer list of people who have signed up this week who we need to reach out to, talk to them about underwriting, do all the actuarial work that was mentioned earlier.
So you said that you lend out Bitcoin and receive the returns in Bitcoin. There's a guy named Gary Gensler who's kind of like not fans of he's not a fan of lending, especially crypto. What kind of licensing would you have to have, and like what kind of insurance policy do your premium holders have in case all of a sudden Mr. Gensler wakes up one day and says, you know what? Life insurance is a security. I don't want to have this done. And even though Bitcoin is a commodity, they're selling a security, I don't like this. What do you do? What kind of insurance do your holders have?
First off, let me start by saying we are regulated in Bermuda, which is a quite legit, it's the insurance capital of the world. They're trying to do more crypto. Premier Burt, the Bermuda Monetary Authority, have worked with us really closely to get regulated. It's actually the jurisdiction that Coinbase is putting their offshore operations in, and we're incredibly well supervised by them. And we live offshore, but are open to Americans and to others globally in buying our policies. What I will say about Mr. Gensler is that the SEC does not have jurisdiction over insurance products. They do have jurisdiction over insurance products when you give people separately managed accounts and let them make choices about the securities to put in their policy. But we have designed our products from the start to be entirely Bitcoin denominated, to have them live on our balance sheet in what's called our general ledger. And it actually makes it quite remote from a regulatory standpoint from the SEC. But we are, unlike some others, we made a choice to be well regulated from the beginning, to have a really close relationship with our regulators. Every month we're talking to them, they're looking to make sure that our customer funds are not commingled with our corporate funds, to make sure that we have an independent board, to make sure that we have a risk committee, that we have policies. We're running a legit insurance company that just happens to be denominated in Bitcoin. And we have done that exactly because we do not want to have the kind of surprises that some others in this space have had, and to make sure that we're, legit from the beginning.
Let's talk about the AI angle. OpenAI CEO Sam Altman has participated in this $19 million funding round. There's some AI underwriting happening here. How does AI introduce itself into your business, and how do you see it kind of working in the future?
Perfect. Yeah, so we're really happy to have Sam. We also have Gradient, who is like Google's AI fund. And these are two of the sort of best AI investors, I think, in the market right now. We're really happy to have them both. So, AI is a big part of what we're doing. And one of the but just to be honest, like, we're a 6-person company, and we have all the operations of a full life insurance company. And the only way we're able to do that is that we have really gone out of our way to automate our underwriting process, to automate our claims process, to automate our reserves process. And that is every day, using, cutting edge AI to make that work. And our long-term ambition is, as I mentioned, to serve people, hundreds of million people around the globe. If not, a billion, we would love to have a billion users, the biggest life insurance company ever. And to do that in a sustainable, scalable way, we're starting by building our systems from day one to leverage artificial intelligence to manage that sort of scale.
Yeah, it sounds like a lot needs to happen before you can get the billion users, right? AI needs to actually become artificial intelligence. We need to understand what's happening with crypto, with Bitcoin, with regulation, especially when you're offering a product to American citizens. How long do you think it's going to be until you get to those billion users?
Yeah. Well, probably decades. But the nice thing about running a life insurance company is that's what we think in. I don't think about the price of Bitcoin today. I think about what is the crypto economy going to look at like in a decade, and 2 decades, and 3 decades. That's how we want our users to think. That's how we think. And when we look out that far, we think there's no question that there's going to be a billion people in this world who are using Bitcoin.
All right, Zach, we're going to have to leave it there. Thank you very much for joining us this morning.
Thank you. Happy to be here.
That was meanwhile CEO Zachary Townsend. Coming up, we'll take a look at what's going on in the crypto markets right after this short break.
Let's get into the crypto markets with AdvisorShares ETF strategist Mackenzie Peterson. Welcome, Mackenzie.
Hey guys, great to be on. Thanks so much for having me.
Glad to have you on. So 2023, we saw an increase in the price of Bitcoin. We've had some stumbles recently because of the crackdown on the centralized exchanges in the US. What's your long-term outlook, or at least to the end of the year, which I guess wouldn't be long-term, it'd be short-term.
We're halfway through. That makes sense. Totally fair. It's been a ride. I feel like, coming from the world of cannabis, used to a bit of a bumpy ride and not afraid of volatility in the long term.
Yeah, but you had some stuff to calm you down when you had the volatility.
That is true. true. I need it. It is very true. But yeah, as you mentioned, regulatory challenges kind of still exist. But I hope, as people are saying, that maybe it'll give us a little bit of clarity in the long term. We'll see. You never know. But yeah, year to date seems like Bitcoin has been having a great year. Still not sure again how the SEC action is really going to affect it. You guys were mentioning not yet so far. We'll see what happens. You never know. But I wish I had more insight in that aspect. But overall, I think we've just seen some encouraging signals that show that there could be strength to come in Bitcoin, which is great. So love to see that. Very excited to see what's coming up.
So AdvisorShares, you guys are involved in, your ETF does Bitcoin futures, correct? I mean, obviously no spot Bitcoin ETF. Don't expect it anytime soon with Gensler running things. But you have the you have the futures ETF. The price of futures are dependent in many ways with what goes on the centralized exchanges, U.S. centralized exchanges. And even though Gensler doesn't seem to be anti-Bitcoin, nonetheless, it seems that those centralized exchanges might have problems elsewhere with him. What kind of risks do you guys model for, and how do you overcome that?
So I think ultimately the product is designed to have sort of that risk managed component. So managing the exposure to Bitcoin over time. So you'd have to ask Mark Yusko, who is the manager of it, who would, have more insight in terms of where he's seeing the risk, when he's turning on exposure, when he's turning off that exposure to futures. So I wouldn't really have the answer to that. But so yeah, I'm not quite sure.
And, let's also look now. I hate bringing this up because the having
do it. You have to say
you're a having person. You're a having person. I don't get this because it's the most telegraphed thing that ever happened. It's right there in the white paper. Mm-hmm. Everyone knows about it. It was this whole thing the retail customer doesn't. They know about it. My mom knows about it. And if you've met my mom, you'd be surprised she knows about the halving. So sure. Why is there this when we look at the coins that are actually that go out into the market, mm-hmm. relatively speaking, from the miners, it's not that much of a big deal anyway. So why is this all of a sudden this voodoo around halving?
Sure. I think it's one of those things where I don't know if your mom knew about the last halving. I don't know her very well or at all. But I think it's one of those things that even people know that it's coming. It still has that big effect just because, again, you are reducing that output by 50%. So I think just sort of the supply and demand component bears that out over time. I know last year we saw, I think it was just under a 20% rise, kind of coming up to the halving. So, who's to say what repeats, what rhymes? But even though people know about it, I still think it's one of those things that does potentially have that positive effect on Bitcoin.
Is it correlation and not? It's not causation, right? It's just it happens at the same time because things have been happening. Wild things happen, and there's a risk appetite going on because the life of Bitcoin has involved cutting interest rates in monetary policy and a lot of wild speculation and a lot of people being excited about spending money that they probably didn't earn. Mm-hmm. And so what exactly, I mean, if we didn't have the halving, does it matter?
I think it could matter. I think people do really like the halving component and like the fact that, those rewards diminish over time. So it sort of hypothetically would boost the value of existing Bitcoins. So I do think that is an important component for a lot of people. It might not be for everyone. I mean, some other people, you might not care as much about it, which is totally fair. But yeah, I think it's an important part for most people, I think.
We spoke about the long term. I just want to still hear from you about Bitcoin's volatility. It seemed pretty kind of steady over the last week when we would expect it to be going down. Tell us what can we expect for volatility of Bitcoin in the short term and then long term past this year?
That's totally fair. So I wish I had the full answer and could tell you exactly how it's going to go. But I do think that, taking an approach where you are managing the risk is sort of the key component of that. So it's going to be volatile no matter what, I think to some degree. How much, I'm not quite sure. But kind of being able to take that approach where you're accounting for it, managing it. In the short term, I'd imagine things could get a little bit dicier just because, again, what we've seen with the SEC. But longer term, if we do get any sort of clarity that comes out of that, I would imagine things would kind of steady out. That would be my guess, but we'll see.
Mackenzie, thank you very much for joining us this morning. That was AdvisorShares ETF strategist Mackenzie Peterson. Next up, we're going to break down why some believe crypto needs to be private by default after this short break. Welcome back to First Mover. This week, CoinDesk is exploring the crypto industry's biggest themes based on conversations that we had at Consensus 2023. Here now to discuss the Consensus at Consensus report is CoinDesk technology reporter Frederick Munawa. Hello, Frederick. Good morning. Welcome to the show.
Morning, Jen. Happy to be here.
All right. Tell us about your chapter. It's called Privacy, Transparency, and Law Enforcement. Where is the path to equilibrium? What issues does this chapter address?
Basically, I wrote this article with our executive director of Consensus, and the article attempts to, I guess, determine whether or not we can achieve a balance between individual privacy on one hand, and on the other hand, the need for transparency in order to, I guess, comply with laws and prevent crime. So that's basically the I guess the overarching theme for that article.
You know, you write in the article, privacy and criminality share an uncomfortably intimate existence, not least of all in crypto. Can you explain what you mean by this?
Well, I think the intro to the article discusses, things like Silk Road. A lot of people don't realize that one reason Bitcoin became popular was because of, this website, which was involved in all kinds of illicit activity. And that's one way Bitcoin gained mass adoption. And so because of that, law enforcement is kind of very suspicious about not just Bitcoin, but crypto in general. So that's that uncomfortable existence where crypto does have a use case, especially Bitcoin, but the roots of crypto are kind of shady. So that's kind of where that intro comes from.
So we look here at, the problem, but the solutions. What you talk to a bunch of experts. What do they say is the solution here that deals with, trying to fight crime on the one hand, or at least helping people fight crime on the other hand, letting people keep their privacy?
So the solutions were split into three main buckets. I would say policy, technology, and then risk-based approaches. So one solution that you might be familiar with, that everyone might be familiar with, when you log onto a website and you see that cookie notice, do you want to allow cookies? So GDPR, right? So GDPR is a privacy-friendly legislation that was introduced in Europe. And that's one thing that all the experts who attended this talk were very supportive of. Another thing was technology. So we've got things like zero knowledge proofs. We've got technologies like homomorphic encryption and verified credentials. So that's another solution to allowing people to have privacy, but also making sure that people have the option to comply with the law. So both privacy friendly and compliance friendly. And then the last thing that people talked about was using a risk-based approach, where instead of, just surveilling and tracking everyone's financial data, these financial institutions or crypto institutions track specific individuals who exhibit high risk, like high value transactions, for example. So those are some of the solutions.
Those are the solutions. What are the challenges ahead? What were some of these privacy experts outlining as the challenges that need to be addressed?
Yes, one big thing that people talked about was how technology is outpacing regulation. And when I say technology, I mean surveillance technology. So think about things like facial recognition and AI and all these tools that governments and banks have at their disposal. They can use those to surveil and track people. But the legislation is stuck in the 70s. And there's an example that I gave in the article that talks about how large cash transactions from the 1970 Bank Secrecy Act are designated as transactions over 10,000, right? So that was 53 years ago. 10,000 in 1970 would be something like 80,000 today, but the threshold is still, 10,000 from 1970. So those are some of the challenges where you have regulation, really slow, but surveillance technology developing at an exponential rate.
Frederick, thank you very much for joining us this morning.
Always a pleasure. Thank you.
That was CoinDesk technology reporter Frederick Munawa. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-host Lawrence Lewitton. Lawrence, I hope you have a great weekend. We'll
Likewise.
see you on Monday. Thank you. First Mover returns on Monday morning at 9 a.m. Eastern Time. In the meantime, you can catch The Hash today at noon. You're watching CoinDesk TV.